Twitter's cast of characters see few limits to profits as IPO approaches vertical line technology. Vertical line. The Guardian. Turn autoplay off. Turn autoplay on. Please activate cookies in order to turn autoplay off. Jump to content S. Jump to comments C. Jump to site navigation 0. Jump to search for. Terms and conditions 8. Edition, UK US O. Your activity. Email subscriptions. Account details. Linked services. Profile mobile. About us. About us. Australia team. Contact us. FAQs. Press office. Jobs. Terms of service. Privacy policy. Advertising guide. Guardian Weekly. Subscribe. How to subscribe. Guardian Weekly. Email services. Evany. Android. .gsc Control CSE width 25 rem exclamation point important padding 0 float right input.gsc search button background color number sign PDDDD border color number sign PDDDD input.gsc search button hover background color number 999 border color number 999 news world sport comment culture business, environment, science, travel, technology, life and style, data, TV, video, news, technology, Twitter. Twitter's cast of characters see few limits to profits as IPO approaches. Having learned lessons from Facebook's public pratfall, founders and investors look set for a stock market payday. Share. Tweet this. Email. Dominic Rush in New York and Juliette Garside in London. The Guardian, Saturday, September 14, 2013 05.03 AEST. Jump to comments. Jack Dorsey, co-founder of Twitter, is currently worth $1 billion. Photo, Bloomberg/Getty. The Twitter co-founder Jack Dorsey looks likely to add between $300 and $450 to his fortune when the social media company goes public. Dorsey is already said to be worth $1 billion, thanks mostly to his 25% stake in Square, an online payment system. His reported 3% stake in Twitter would be worth more than $350 million if the company achieved the $10 billion $15 billion plus valuation now being ascribed to it by analysts. He will not be the only tech mogul to realize another huge payday from the IPO, which was announced via Twitter last Thursday. The company has the backing of a galaxy of Silicon Valley's top investors, including the Amazon founder Jeff Bezos and the Netscape co-founder Marc Andreessen. Chief Executive Dick Costolo is an investor too, as are Dorsey's fellow co-founders, Bea Stone and Ed Williams. It is unclear, for now, how much each will benefit. Twitter is taking advantage of new rules to start its initial public offering IPO under the radar. But as with Facebook, the last big tech IPO, the tech establishment looks set to make a killing. The Facebook share sale proved controversial and costly as early investors cashed out, ahead of an embarrassing collapse in the share price. Twitter will no doubt be keen to avoid the same mistake. If the sale goes smoothly, Twitter could come to market at the end of this year and be worth as much $15 billion, according to Pritco, which gathers information on private companies. Twitter will learn from Facebook's flawed playbook and do the opposite, said Pritco's chief executive, Sam Damade. Unlike Facebook, which waited too long to IPO until its growth rate decelerated, Twitter will IPO at just the right inflection point, while revenue grows in triple digits. Twitter has told staff that it is sometimes profitable, but it is likely that the company is still loss-making most of the time. The company is spending to drive growth. Earlier this week it paid a reported $300 million for Mopub, the mobile AD technology firm, the eighth company it has acquired this year. Going public will give Twitter another currency, its shares, with which to finance new deals. But how much money it will raise, and how much money it is making, remains a mystery. Twitter has filed for a confidential initial public offering under the Jumpstart Our Business Startups Jobs Act. The act allows Twitter to consult privately with regulators ahead of the share sale, outside the glare of publicity the IPO would otherwise receive. Pritco believes the float will be conservatively priced at 20 to 30 times revenue. With 2013 revenues expected to exceed $500 million, this would make